Welcome back, Southern California, AM 1220, FM 98.1 KHTS. Host Fred Arnold with David Cantrell.
Hello, good afternoon.
Very pretty day, anyways.
Beautiful day outside. From what I understand, it's a good day for a protest.
Yeah. Well, let's talk about.
Yeah.
Some people want to protest about their credit because their
some-
credit score
Yes.
isn't as high as they want it to be, right?
And they don't know why, and we
Yes.
can tell them.
So
We can
let's
definitely tell
talk
them.
about that.
So credit is made up of a couple of different things. Your credit, let me back. Your credit score is made up of a couple of different things. It's not just making payments on time. There are other things that go into it. And so, why don't you, Fred? Because I mean, you know this backward form from your 29 years, and I find it funny you always say 29, not 30. Your 29 years in the mortgage business. What's the first thing that affects somebody's credit score?
Yeah, first of all, you want to get your credit score as high as possible because it affects the cost of money for the rest of your life.
Correct.
And I advise people that are 50, I advise people that are 40, 30 on getting higher credit, so it doesn't discriminate.
Right.
Low credit scores don't discriminate.
Not at all.
And therefore, you're going to pay a higher interest rate. So, number one, payment history. Are you paying on time?
Okay.
That's pretty obvious, right? 30-day late is what they look at, number one, 60 and then 90.
Right.
Don't be 30 days late. Now, if you're 4 or 5 days late and you pay it and you pay the penalty, typically you're not 30 days late, so that doesn't go as negative on your credit.
Right.
That's not good because there's a penalty and there's a higher interest rate and on and on. But look, get it paid within that 30 days. It's interesting. Let's say you're late 60 days, right before the 60th day, and you make a payment.
Right.
Well, that payment goes to the payment you owed 45 days ago.
Correct.
So if you wait another 30 days, you're going to have another 30-day late. It's called a rolling 30-day late. And we see people getting that where they're already one payment behind. So they're always one payment behind. Well, that puts you late every single month.
Yeah.
Because you're paying for way back then versus having one late a year ago,
yeah,
right?
Actually, I had a situation exactly like that where I was working with a customer and we were doing a loan, and she had 29 lates. And she was like, I've never
29 30-day lates.
29 30-day lates. And she was like, you got to be kidding me. I make my payment every time. And then we delved into it a little bit, and it was exactly that. She was late once, but then she kept making her payments, but she never doubled up to make that payment current.
Yep. So number one thing is don't be late. Now, let's say you have been late. Catch up as quickly as you can.
Yeah.
But what about what kills people all the time is the collection accounts. Is what happens is you stop paying and you're being billed, let's say for your medical bill.
Right.
Ambulance ride.
Right.
People don't think, well, there's a $100 copay or $200 copay or whatever it is on your ambulance ride, because it happened to me. And ambulance ride, so you're being billed by the ambulance company.
Right.
Right? And you don't pay it, so it goes up as a collection. And then they sell it to ABC Collection Company.
Right.
And now it goes as two different separate incidences.
Right.
I get that right? And let's say the insurance company was supposed to pay it.
Right.
Well, that's still on your credit.
It doesn't matter. You have to watch your own credit.
Yeah, and you got to make sure it's under. So collection accounts, I say, are critical to pay. However, in some cases, when you pay an old collection account, it reports as new, and then all of a sudden your score goes down. So it's important you talk to a professional on that. But keep an eye on it. Be vigilant. If there's a $39 copay or $200 copay, find out and clarify within 30 days so you can get it, or pay it and then ask for a refund later.
Right. Now the next thing the most popular thing I hear is I'm going to pay off all my credit cards so my credit will go up. So let's talk about balances a little bit. And let's clarify when that's a good idea and when it might not be a great idea to do that.
Yeah, so let's talk about balances. That's the second most important thing when it comes to increasing your credit score.
Right.
Real simple. If you can have your credit cards at less than 50%, but ideally less than 10 or 15% of what the balance, what the credit limit is.
Right.
So let's talk about that. I'll make it real simple. Imagine $10,000 credit limit.
Okay.
So you have one credit card, that's all you have, $10,000 limit, and you owe $2,000. Only 20% of your credit card limit is being used.
Right.
Okay. But what if you owed $8,000? Now 80% of that limit is being used, and that's where you run into the problem is when you get above 50% of your cards. Now, I ran into somebody. We ran a scenario today. Now, follow me on this. You know, those listening to this or watching online can relate. Went and bought something from Living Spaces. Good company. Number one is from a finance company. So the rate's
Right.
going to be higher.
Right.
But no
Absolutely.
payment for 12 months.
Right. Okay.
He owes $4,800
Mm-hmm.
because he bought some really nice furniture. It looks great.
Right.
But the limit's $5,000. So immediately he has a new debt from a finance company, which is not as good as from a credit union or
Right.
bank, that's almost maxed out.
Right.
So the computer looks at that and goes, oh boy, finance company, they'll finance anybody.
Right.
And almost maxed out.
Right.
That happened to me once. You go to Best Buy and buy a $1,200
Mm-hmm.
cool wraparound TV, 3D, 4K, whatever they have
Right.
now. I don't know what they have nowadays.
Right.
Shane will probably know.
That sounds about right.
Yep. And so they have all this cool stuff. And let's say it's $1,200. They give you a limit of, $1,500. Oh, let's buy some more things.
Mm-hmm. Right.
But you're maxed out.
Yeah.
And so you want to have those limits lower. So if he paid his credit card down to, I think they said $100, which is a lot, but he had the money at the time. And he had another credit card that was like 80% owed.
Mm-hmm.
His score was going to go from like 675, 680
Right.
to
That's
730.
crazy.
Huge.
Just
Just
for-
knowing this
yeah.
information, now when he goes and buys, he's going to pay 1/4 to 3/8% for the next 30 years lower.
Right. Absolutely. And the other thing, when you mentioned the no payments for 12 months, remember that balance is going to stay there for 12 months. So yeah, you're
Actually,
not
it's going to
late.
go up. It's going to go
yeah,
up
because
you're not
they're
making
gonna-
a payment. The
Yeah, and they're
interest-
going to add interest onto it. So yeah, it is no payment, but that is going to stay with you that entire time. So when you go to try and buy something else, your credit score is going to definitely drop.
Yeah. Two more quick tips, okay, Shane, if that's okay.
Yeah,
Two
go for
more
it.
quick tips, and that is a couple, but don't apply for too many credit cards at one time. Like let's say promotion around
Right,
the holidays,
right.
10% off, 10% off.
Right.
Look, you're going to save $10, or you're going to save, even if you spend $1,000, you save $100. It's an inquiry. Every new inquiry causes your score to go down a little bit. If you're shopping for a car, shop within the first that 2-week period.
Right. Yes.
Right? If you're shopping for a mortgage, again, same thing, 2 to 3
Yeah.
weeks, get it down. That's number one. Number two, credit type. Try to stay away from finance companies or getting credit from department stores, if you will, because they use finance companies, versus go to your local credit
Yeah.
union.
Yes. Absolutely.
Go to your small bank, and I'm a big fan. There's a couple of them here in Santa Clarita, or credit union.
Yeah.
And get financing there, consumer financing there, because the types of credit is critical.
Yes.
And last but not least, so those two. And last little tip here is, so we don't want to max out. You want to make your payments on time. Credit history. How long
History.
you've had it.
Yeah.
So when my kids went to away to college, I put them on my credit card that I've had for 15, 20 years. And all of a sudden, they had credit going back to when they were 8
Right.
or 7.
Exactly.
So it made it look like they've had this card
Right,
forever.
right.
So if you can get added to a parent's card or a spouse's card, sometimes one spouse will have great
Right,
credit and
right.
one won't. As a full user, as a full signer, now you have credit going back 2, 3,
Right.
5, 10 years.
Right.
Especially if you're young, like Shane. Get your, hopefully your parents make their credit card payments on time. Get added to one of theirs as a full user, and all of a sudden
You have credit history.
you have credit history, right?
Yeah.
And that's not what the idea is. But
Right.
look, if you're trying to get ahead in this world, why not know the way the game's played?
Yeah.
Because someone made these rules for you.
Yeah.
So anyhow, there's so many ways to increase your credit score so long term you can have a lower cost of funds. Shane, a tip or two? What do you think as a young man?
Oh, that's good. I thought you were going to give me more. I was going to say, I've been keeping mental notes and all of this.
Nice.
yeah.
Give Dave or myself a call. Anybody, American Family Funding,
Yeah.
661-284-1150. Happy to kind of guide you down, even if you're just looking to buy a car.
Yeah,
We don't sell car loans, but we'll tell you where to go and how to.
Yeah, because we know about credit, we can definitely help you out.
Yeah, so we're going to jump to a quick break, but when we come back, I know we have Anthony Bedgood coming in, right?
I believe, he should be coming on pretty soon.
And we're going to give you an update on what's going on in the streets of Santa Clarita. You've been watching online and listening to AM 1220 FM 98.1 KHTS.